So
exactly.
why would you buy the breakout and not the retrace?
Yeah, it's a great question because sometimes, particularly with gold, right? Sometimes we don't get the retracement. So I'm anticipating the retracement, but sometimes we get, just a nice big move. And I've had it to where, when I see a setup like this, when you have a big pullback, it's almost like think of like a catapult, right?
Yeah.
The further back it pulls, the
Right.
more force it has behind it. And so when that pressure is released, the
Right.
force is sometimes enough to just push it right through to its target.
What about you, Chris? Like, how do you do backups?
I'm actually seeing a setup right now. If I can maybe share that first, and then I'll
Let's do a
share my
setup.
backup.
Let's do a setup. Wait, enough of
sorry to
this
jump
nonsense.
again.
Let's do some trading. Okay, what are you seeing?
sorry to jump the gun. I just I don't want to miss the opportunity.
Yeah, you got it. You got it.
So I'm looking at gold. Okay, good. You can see my screen. Great. So I'm looking at gold.
We see a screen.
Excellent. So I'm looking at gold, and on the day, my initial buy signal this morning was over here. Worked out absolutely beautifully. We've established a new high. The market then came down and basically tested all of the movement for the entire day, right?
Right.
Literally just came back and erased all the gains from the whole day.
Correct.
But then found support, okay? And as it found support, it left behind a beautiful, this is called a piercing line, right? Textbook piercing line right in here. And so as the market's now moving off of this piercing line, what I'm anticipating is that as it comes up to break the new high, I'm anticipating a break, a test, and then a continued rally. So I'm looking to buy at the break of the high there. So I've got a pending order, and I'll share my parameters with you here. So I've got an entry buy stop here at 1862.05.
Okay. Right.
With a stop loss at 1850.56, and then a take profit here at 1879.30.
So I'm sorry, you're expecting a breakout, then you're expecting a retrace, and then you're expecting a continuation, right?
Exactly. Yeah.
So
exactly.
why would you buy the breakout and not the retrace?
Yeah, it's a great question because sometimes, particularly with gold, right? Sometimes we don't get the retracement. So I'm anticipating the retracement, but sometimes we get, just a nice big move. And I've had it to where, when I see a setup like this, when you have a big pullback, it's almost like think of like a catapult, right?
Yeah.
The further back it pulls, the more force it has behind it. And so when that pressure is released, the force is sometimes enough to just push it right through to its target. So what I do in a situation like this is I'll put my actual profit target at 1 to 1.5, but then I'll put an alert at 1 to 1 to alert me, because typically that big move you'll get is for a 1 to 1. And so right at the 1 to 1, unless it's showing aggressive signs that it's still going to continue, I'll probably just take it right there.
Okay, cool. Can you, two things. Can you circle the piercing line? I don't quite understand what a piercing line is.
Yeah, absolutely. So basically a piercing line is this right in here, this formation. And the way we identify it is when the market, when the bears are in control, right, aggressively in control, and then all of a sudden we have a sudden shift where the bulls take back control and bring this to beyond the 50% mark of the previous bear candle. That's the trick.
So they take it above the 50% mark of the bear candle. So that means that, they're forcing the shorts to start thinking about covering, and it's really interesting. I do all of this myself, like very similar, ideas, but just completely different, sort of similar ideas, but just a different approach, but the same concept. It's all about, it's like arm wrestling, it's all about finding that pivot point where the other guy thinks he's winning, and then suddenly the guy just starts flipping him the other way, and all of a sudden he finds himself on the losing end of the battle instead of the winning end. And that's the perfect place you want to be in, because that's when everybody scrambles to go the other way. That's very, very interesting. Sorry, can you just give me your stops targets again? I'm just trying to figure out so what was the ratios here?
Absolutely. I just want to share, I've got another position up, and that's going to be on pound dollar. So let me, I'll just go ahead and, if I may, I'll just put this in.
Yeah, go ahead, sure.
With you. So I'm going to sell. I'm going to go ahead and sell.
Okay.
I also am short right now, but we can get into that after, Chris.
Okay.
Yeah, but I was short first, WT, right? So
No, not in that. I'm short in the NQ.
Okay.
okay.
No, I don't do the currencies. I mean, I trade
That's
the
right, you
currency
don't trade
futures
currency.
somewhat. Yeah, so you and I are playing two different games here.
I forgot about that.
So this is a 15-minute pound chart. You short the pound on this kind of exhaustion formation, and it's a what are the rate? What's the price levels that we're stopping targeting?
So I'm gonna just look to go 1-to-1 here on this one. So let me get my exact entry for you because I went ahead and shorted at market. Or let me try that again. Thought I shorted at market. Okay, so 26.19 it looks like it's going to be.
Right.
Yeah, 26.19.
Right.
Yeah, so 26.19 was my. I'm going to go ahead and put a stop at 26.45, and then I'm going to look to take profit right at the 1-to-1, whatever price that ends up being.
Right.
So in this case, that's going to be 25.93.
Okay. So you're looking for them to run the round number, and what's the reason for this?
So we are actually in an uptrend, on a shorter scale on the pound dollar at the moment.
Right.
But I work a lot with Fibonacci's, and right now what we've done is we've hit and fulfilled the most recent anticipated 1.618 D extension, and so whenever we see this happen, price rejection off of that D extension. What I call this is a sub-fib, right? So in here we have impulse, correction. The idea would be continuation down to the trend line, right? And so this to me would move off of this impulse. And so I see opportunity to come all the way down to the trend line. And in fact, I see opportunity to come all the way back to a 38.2 here as well at 25.38. But I'm not greedy. I'm just going to go ahead and take my 1-to-1 on this. But my overall prediction is bigger, but I'm just going to take a little piece of the pie instead of the whole thing.
So interesting. So all of your methodology and logic is within the greater pattern evolution of the trade. Super interesting.